following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Be impeccable with your word. Manifest your true intentions. Regardless of what language you speak. Your intent will manifest through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials down 71, NASDAQ off 75, S&P's down 15, gold contract down $17.30, trading at $13.24 an ounce. Silver off 86 cents, $16.26 an ounce. Notes, 10-year note, up one tick, 120.30. 30-year bond up 11 ticks, 145.31. Now, both notes and bonds, folks, they had higher price today. They have volume behind the move. I expect you're going to be right back topside. The 30 has been holding. 10 years still flat. King dollar. King dollar up 757 ticks, 89.740. King dollar has some strength out here today. Let's go over and take a look at King dollar. King dollar, bottom line, is going up with volume increasing. We've done 31,000 contracts, good contract volume. That's saying King dollar is going to go after this swing. The swing we're talking about is 90.490. Now, let's go right over to gold from there. You got King dollar going higher, gold going lower. We're rolling on the gold contract. We're rolling from one contract to the June contract, April to June. So what we have out here is this. Gold is pulling back. You've done 352,000 contracts. That being said, we're coming into 457,000. Now, the way that the dollar is trading, it's like, okay, tomorrow you're probably going to challenge this 13.15. That's where we started off from. So bottom line, we'll see how that gets that challenge going down. You got to remember that this is a 4-day week. The GDX. The equities, they're pulling back with tremendously lighter volume. That's a good situation. We're pulling back on the GDX with 28 million shares versus 77. Not bad. Notes and bonds. Let's go take a look at the note and bond market. First, you're looking at the 10-year note. 10-year note right now got to a price point out here today of 121.09. We've done 2.1 million contracts. That's a beautiful contract number, folks. It's monster contract number. You're going after the high from February 6th. February 6th, 122.02 is the number. We've made it to 121.09 today. We go take a look at the 30-year. What you're going to see in the 30-year. 30-year has actually got right next to it. 30-year thus far, also big contract volume, 320,000 contracts. You at a price point of 145.31. You got to 146.10. 11 ticks away from that high. So you're building cars to get into that high from the February 6th level. Oil, what do we got the oil contract? We had the API numbers come out this morning. Oil has some nice volatility in it. We had a high today of 65.13, a low of 63.72. This is after testing the swing high on Monday. It failed. It failed at 66.02. We get up there on Monday. We went to 66.55. You failed. You had 558,000 contracts. 586 rather. 586. You come off of that. We come off with volume. Now we're going to see how it's going to challenge the 64 mark. You get inside 64, then game is going to be on for 57, which is pretty wild looking at this whole deal. Now, NDX 100. Let's go take a look at the NDX. The NDX 100, folks, is an ABC structure on the way down. You have your B point out here is 158.43, and you need 80 million shares. We're going to do 80 million. When I started the program, I did the 3 o'clock update, which is 11 minutes ago. We had 60 million. We get 69 million. This is taking it apart with volume. Huge heads up. Bottom line, inside the NDX 100, the strength versus the weakness out here today. And keep in mind that it was the NDX and the composite that took us down. Took us up, took us down. The losers out here are bringing it down. You get Tesla down 8.4%, or $23. You get Amazon down 5%, or $75. Netflix is down 4.6%, or $14. And MELI is down $16.54. We go over and we take a look at Facebook. Bottom line, FB, Facebook right now, banging into lows. It's up $1.20, but you are banging into lows. You get big volume. You've gone back to your breakout area, and the breakout area that we're talking about is July of 2014, 151. Guess what? You're hitting that, you're slamming into that. Facebook's going to get a lot lower in price. Now, the thing that's amazing about Facebook, so check this out. You know, you got Zuckerberg out in a suit, turning around saying, yeah, he's going to fix the settings, make things a lot easier. Well, what they also did, so let me just read the story, because this is a trip. The social media giant is going to delay unveiling a new home products, and is redesigning a menu for privacy settings on its network. Facebook's new hardware products, connected speakers with digital assistant and video chat capabilities. So check it out. Connected speakers with digital chat and video chat capabilities undergoing a deeper review to ensure that they make the right trade-offs regarding user data, according to people familiar with the matter. While the hardware wasn't expected to be available until the fall, the company had hoped to preview the devices at its developer conference next month. Can you imagine, folks? You got Facebook already putting basically not only devices but video devices in your house. Everyone's going to be running around with their shots on. Forget it, man. I mean, this is going to be pretty insane. Bottom line, Facebook technically wants to go lower. Fundamentally, we'll see whether they're going to get like the Amazons of the world. Some of the high volume stocks out here, let's go take a look at them. You have the GE's up 11 cents. So this is pretty cool with GE. So check this out. They are trying to pump GE so bad it's unbelievable. So the biggest bull, so here it is here. The Wiley Report rumors about Warren Buffett taking a GE position appear to be true. This is just basically an article. So a potential announcement could be announced any day. An analyst, Scott Davis, writes in a note adding that the stock is highly likely to find a bottom. Davis, a longtime bull on GE, said he personally bought more of the company's stock on Monday. It's an embarrassingly high position of my personally holdings, he added. Good luck, pal. See ya. Don't want to be ya. Stay right there, folks. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now down 45, Nasdaq's off 64, S&Ps are off 12.5. Percentage-wise, what we have out here, you have the Dow down 0.2%, S&P's down 0.3, Nasdaq Composite down 0.9. If we go over to the Composite and take a look at it, you'll see that the Composite is breaking the low, has broken the low. Low we're talking about there is on the 23rd. So let's go take a look at the, let's see, 69.17. Yeah, what the Composite has also done, folks, is got into the highs of the low bar on the 9th. So what day am I going after? The 23rd. So if we look after the 20, we're looking for the what the volume is on the 23rd versus where we are right now. Okay, so 23rd, 2.4 billion. It's gonna, well, we'll see. It's going to be close whether it does 2.4. We're at 1.9 right now. It can do 2.4 pretty easy. NDX is going to do the volume. If the Composite does the volume simultaneously, guess what? Your probability goes a lot higher that you get that ABC down in force. And as I said a little bit earlier, this is the building cause of going lower. The NASDAQ itself is just so weak. It's pretty, you know, listen, the NASDAQ brings you up, the NASDAQ brings you down. If you go to look at the NDX, we're right, let's see, 64.53 was the high of the low. We already hit 64.10. And we're maybe one of the culprits out here in the next couple days is going to be Google. So what you have with Google is this. You know, the February 9th swing low is 992. We hit 980 today. And you're going to hit that baby. It looks to me like you're going to get the volume in on the hit also. Right now you're at 2.9 million. That is building cause to jump the creek. So this is really dangerous, not only just for Google, but for the NDX. The reason being is that if you jump this creek, we've been in this higher trading range since October of 2017. You know, it's come down twice heavily. Bottom line, has volume down there, and it's not holding price. So if you jump the creek, your next creek is set up between 998 and then you get a gap at 870. So that would be quite a hit. If we bring this back and put this on a monthly, what you're going to see, you get volume. Oh, this is volume off the high too. This is going to get intriguing to see how this shakes out, man. You know, This is volume off the high. And yeah, the question, yes, there's a lot of gaps in Google. I mean, there's a lot of gaps in a lot of the high stocks that have gone dramatically higher. And, you know, that's because they come out with numbers, they did all of the above. But once you start hitting gaps on the way down, you have to be cognizant of where they are, because guess what? They're like magnets once they break. And when you're breaking with volume, which we are, in Google, it's a big heads up. So Google itself could be the next one to really get ripped apart. Amazon out here today, it's down $73. That's going after your high volume swing low. Right now you hit, we haven't hit the high of it yet. The high of it on Amazon is $13.83. The low is $12.65. Monster volume out here today, though, 12.3 million, which is going to set up the high volume swing. So what happens here on Amazon, and this is going to happen with a lot of the equities, on a weekly, you're already into the bar of the week of February 9th. The top of that bar is 1460, the bottom is 1275, and once you're into it, your probability gets pretty good. Well, you're only $40 into it now. It'd have to get a little bit more than that. The size of this bar is almost $200. Yeah, you'd want to get a good 75 into it. You get 75 into it, guess what? You're going to the bottom of that bar. Some of the Dow stock, well, here, let's go look inside the Dow Industrials, the strength versus the weakness out here. Strength out here today, putting points into the Dow. Travelers is up, is putting 13 positive points. You have Walmart putting 10. Merck is putting 9. Taken away from it, you got Caterpillar, negative 16. Chevron 15, Boeing 14, Intel 11. That's nothing for Boeing, by the way. Boeing must be just about flat, because when Boeing moves at all, yeah, it's down $2. When Boeing moves at all, our bottom line is that you're going a lot lower. Now, this is a heads up, too. So Boeing, under the, right at it right now, under the February 5th, February 6th, the swing low. And it's not an ABC down. But bottom line is that you're breaking it. So that's saying that Boeing can run back pretty easily now to 296. 296 is where we broke topside from just January 5th. Big heads up, no doubt. Goldman, let's go to Goldman Sachs. The financials out here. The financials came down hard yesterday. And, you know, right now you're flat. You're going after the same number. This number, man, you talk about a magnet. It's a magnet in a big way. You know, Goldman's down from a price point of a 275, you're 248, and I think, let me pull this back again. This is going to be the magic number. Now, this is going to be wild if, I think it's 250.50. It's 250.70. Okay, so check this out. This is going to be great watching this thing shake out. So check this out, folks. We are at, my God, is this, if you get a close, I believe this is, let me just look at this. I want to make sure. Yeah. Okay. If we get a close tomorrow in Goldman Sachs under $250.70, you're talking about major, major failure. So watch. We've been watching this for now. This is going on 3 months, right? The highs of 2007 are $250.70. The volume is 227 million. Goldman got over it. The first time they got over it was in March of last year. Okay? So and this is what makes top. So you really want to keep your head wrapped around this. So watch this. We're in March of 2018. March of 2017, Goldman gets over it. Closes under it. Failure. Okay? That's the first time. What does Goldman do? It goes from 255, no big deal, goes down to 209. $41, but really not a big deal, right? Okay, makes it all the way back up. Now watch how we made it back up. It's pretty amazing. Zero volume whatsoever. I mean, you're talking about anemic. 55 million, 54 million. Okay, now we take it out again, and we take it out with 53 million. We get higher with 80 million. What high is that? 273. We get higher this month with 58 million, and you're going to have a failure. So you're going to take the volume from today. We have 58 million. You only have one more trading day. We can add another trading day in. And when you're doing it monthly, by the way, folks, one of the easiest ways to do it, you can go back to the month and see how many trading days was in that month, or you can just average them out at 21. The average is 21 trading days a month. So what you have here, if you close underneath it, your correlation will be approximately 60 million shares going against 277, a year at highs with light volume. There's your failure. That's going to be a big heads up, man. Let's go to the XLF, because we saw the XLF yesterday. The XLF was coming down, had juice on the way down, and the XLF right now is $27.17, and it's right into the February 9th level. It wants lower price. Stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Dow down 21, NASDAQ down 56, S&P's off 9. Coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 6. You get the NASDAQ down 47. S&Ps are down 7.5. Let's go to our man Tom in Plymouth. What's going on, brother?
Hey, good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Pretty good.
Yeah?
Can't complain. I just jumped in that J-Nug. Finally got me to bite on it.
Okay.
And, the TVIX I'm looking, we'll talk about the J-Nug first.
Okay, so the J-Nug, folks, is the direction junior miners bull 3 times leverage product. It's trading at 13.13 Well, you know, it's not the end of the world. I think I would have waited till tomorrow, but
Yeah.
yeah, just because.
Well, I don't have a big position, but
Yeah, so you know, it's coming into strength. You know, strength is 24 million. You're coming in with 13. We'll probably do 15. The reason I'm saying that, Tom, is that when I look at the gold market and the dollar, it looks like, you know, like picture that tomorrow in the gold market, folks, is a Friday. You know, bottom line is that Fridays in the gold market in general are great when you're going up and they're terrible when you're going down. So,
how about Thursday though?
Yeah, because the market's closed Friday.
Oh yes, yes. Oh, thank you. I haven't been paying attention that much.
That's all right.
That TVIC has my head spinning.
Yeah, I bet it does. So that being said, so if we go to the GDX, right, which trades off the whoops, no, what's it? GDXJ.
Okay. Yep.
Yeah, GDXJ. So the J nug trades off of this. And I like how it's pulling back. Look at it. I mean, you know, you're pulling back into 24 million. You've done 6 million. But it looks, you know, it looks like, yeah, can it get into 31.61 tomorrow? Yeah, it did 31.62 today. You know, listen, I don't think it's that bad a trade. That's the bottom line. Meaning,
yeah,
it'd be one more day.
And we end up buy a little more tomorrow.
Well, we know the way that these work, folks. If you're going into these triples, the bottom line is that Tom trades them a lot. Scaling is a good deal. There's no doubt, because what happens is that you can figure out how much you want to put into them. You can figure out what your risk threshold is, and then when they pop, man, just get out, take your bread, and get out of town, man. Do you know what I mean?
Yep. I'm almost $1 lower than yesterday. I sat on my hands yesterday. I was watching. I'm like, I don't know.
No, I'm with you. Listen, it's there's a lot to be said. You know, about, like, I mean, the GDX is almost rejecting lower price right here, right now. So, you know, that in itself is pretty cool. The dollar, though, does have some strength today. So, you know, that dollar is not backing off. This is the first time it hasn't backed off in a while. So, you know, we'll see how it can handle this, the 90.40.
Yeah, we'll keep that in mind then.
Yeah. So what are you doing? What are you doing right with the TVIX? I know you've been trading the heck out of it.
I got out about an hour ago, and I'm just waiting to the end here to see if I can get back in. But you know, that thing is so volatile. It's like, I mean, this past week, it's really been bad. You know?
And look what it did. I mean,
it's been good.
Yeah, I mean, what's interesting here, so the TVIX, folks, okay, is the Velocity 2 times VIX product. It's taken its swing point out with volume. So this, guess what, man? This gets gained now to 15.45, man. You know.
I remember in the summer when I was talking to you back in the summer there, the late summer, the fall, it was like 1688. That was my key number to buy.
Yeah.
I hope it can go back to somewhere near that 16. I don't stay in it long enough for that to happen, but boy, you know. No,
listen, this is volatility in spades, and you know, the bottom line is that it's all there. You know, I mean, you know, my take on it is that, you know, you get the February 9th deal. You know, you get some of the big stocks already underneath it. The NDX 100 today is going to do the number, you know, so you get an ABC down. And, you know, the rest of the markets are just deviant enough, meaning going sideways. But that's what normally happens, folks, okay? It takes a huge amount of energy to go down as we did go down. Never mind, this hasn't been like, if you look at the Art of Time in the Trade, my book, this is a sideways move after a vicious downdraft. That is about as weak a market as you can get, man. That's like, normally you'll get some kind of a bounce going. It looks to me like the first leg down, January into the February 9th time frame, that took a monster amount of energy, and guess what? All the energy was expended on the huge move all the way back up. So now what you have, man, there's just no energy in this market. And, you know, you're going to build some cause to go lower, and the first indication that lower is going to be there has to do with that NDX 100. So,
hey Tom, I don't know if you can hear that, but that's my shovel clearing the last little bit of ice up here. We're finally melting away.
Oh, that's awesome, man. Well, I'm glad. It's about time. Let's see. You're gonna be in the summer pretty soon, man. We're in April.
I'm in a T-shirt right now, but
oh, that's gotta feel good, right? It's gotta feel good, man. Yeah, totally.
Hey, if you get a chance, too, check out that SQQQ for me, too. I got a little bit of that going on.
Well, here, let's look at it right now. So this here, folks, is the ProShares triple inverse correlation. So this is going to be an ABC up. Yeah, there you go. It's taking a B point out with volume. Here you go, man. Look at this. So your B point is 1924, 25 million shares. You've done 32. Your A point on this is 1550. Your B point is 1924. So you got what? Almost like 375, which is going to get you, bottom line is at about $21. And 23 is your swing point. That's where we're going, man. February 9th.
Beautiful.
February 9th, here we come, man. It's great. You know, it's great. You know what's so crazy about it, folks? It's sticking out like a sore thumb, but when you take a swing point out, you got the volume is sticking out there. It's like, you know what? It wants to go visit its pal. You know.
It's just a long time coming for, so maybe that's even better, because who knows?
Oh, yeah, listen, man, there's one of the problems, no doubt, I would say, just in this correction in general, is that because we haven't corrected in such a long period of time, you can have a normal correction in a bull market that will be vicious because we haven't. And a 0.382 correction, folks, of the move, of the whole move, oh my God, that's a big number. And if we looked at this 5 years, let's picture you get a 0.382 correction, and then over time markets keep going up. That's normal, okay? But the bottom line is that in the middle of that correction, it'll be vicious. The only time that it would look like not a big deal is 5 or 10 years from now. There's a statistic in Bloomberg this morning, and this is what the statistic was. When you get just the correction that we have right now thus far, which is not big at all, they were saying that when you come back down this fast, that it takes 200 days on average to get back to the highs. That in itself is a monster number,
Yeah,
so.
Yeah. All right then, Tom. If I don't talk to you tomorrow, have a happy Easter.
You also have a great one, man. Have a safe one.
Hey.
Let's see. So let's go look at this. I think some of the Tigers are saying, what are we approaching the 200-day moving average? Let me see how this shakes out. Oh, look at that. Wow. Yeah. So this is pretty cool. So yeah, it's holding right at this. So that's what you have here. This is pretty cool, man. So check this out. Let's see, that would have been last Friday. We got right to the 200-day, right to it, too, 258.24. And it's right down to it today. Now, what's going to happen here, this is what also happens, is that, this thing starts rolling. You stay right there, folks. We come right back. But this is about as cool as you can get when you're actually looking at it.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. The Dow right now is up 81. Nasdaq's down 29. S&Ps are flat. And let's go over and take a look at that SPY as it's flattening out. So bottom line is what you're going to have here. You're already 116 million shares. You're flattening out. But guess what, folks? That is the building cause aspect because you get an expansion of volume simultaneously. Yesterday we did 129 million, and we're going to do more than that today. NDX is still laying out here with big volume. You're already over the B point. The B point was no, not yet. Okay, you give it a few more minutes. We're at 76.7 million right now. 80 million is the number that you're going to need. Tesla is taking it on the chin in a big way. Down 19 bucks, 259.78. Now what Tesla has done is that it's broken the consolidation that it's been trading in since, let's see, since March of 2017. This is a big number too. So when you break a consolidation, bottom line, you know, you're getting to the next lower building floor. Let's say you're in a five-story building, whatever that is. Let's say you're in the top floor. Now you get out of the fourth floor. Well, the fourth floor also has a high volume low sticking out like a sore thumb. And it's from February of 2016. The high of that is 163. The low is 144. You broke the whole consolidation with monster volume, huge volume. Right now, we've already done 41 million. The swing point is 47 million, and you have 2 days left of trading. Now, we have one more day left of trading, but what you have to do is you have to basically average out the 4 days, add in the fifth day. That's going to be way beyond the 47 million. So Tesla's in trouble. And Tesla, what's also happening, you know, that's in the equity market. In the bond market, they're taking it on the chin in a huge way out here today. So what you have inside the bond market, and this is when Musk has to go back out into the market and get a few more dollars, okay? Let's see. Let's see where the bonds are trading right here. Let's see. So this is pretty wild, you know. And he sold so many bonds, man. It's amazing. Okay, let's see. Bond investors pretty much ignoring the car makers' profit burn. Okay, so in August, just in August, the bond market lent him 1.8 billion. Now those notes right now. Now when you do a note, bottom line is that you're starting off at 100 cents on the dollar. So those notes right now are at 86 cents today. That's not unusual. The bottom line is that, you know, that bond market can go down just as quick as the stock market. Most times, though, when the debt aspect of it you don't see it down 16% in less than a year. That is going to be a big problem, because now what you're going to have is that their cash burn hasn't stopped. So now they're going to do two different things. They're going to go back out in the marketplace for more money. As they go back out in the marketplace, what you'll see is that they're going to have to pay up at this particular point, because you know, bottom line is that you get a lower stock price. You have a problem with bringing the Model 3s to market, and the structure, the debt structure on this company is phenomenal. You know, they'll give them time, but what does happen is for a bond investor, this would be the worst case scenario, is when markets go down, and let's say that we take a hit for about 4 to 6 weeks. If you take a hit for about 4 to 6 weeks, and he happens to need any type of money at that point, that is when devastation comes in markets, and they come in very quickly. So, you know, I don't see. Let me just look at this again. Put this on. I'm going to put this on a monthly and a much longer term basis. Yeah, it's not the end of the world. Well, let's put it this way. It looks like it has a lot of support at $181. But that's a long way down from the high of 356. But it's not total destruction. What it would do, it would come back in the range that it had been trading in since 2014 over to 2016. Yeah. So, you know, for the folks that bought it up there, they'll be in trouble. But the rest of it, guess what? It doesn't look like the end of the world. And of course, what you got to know when you're looking at Tesla, so let me give you these numbers, because these numbers are pretty wild. So Tesla this year, 2018, plans on taking in $19.2 billion. Now, 2017, they haven't come out with their first quarter yet. 2017, they only took 11.8. So a lot of that is predicated on these number 3s coming out. That being said, the loss structure is huge. They lost $8.66 a share in 2017. They plan on losing an additional 651 cents a share in 2018. And if you believe the numbers, they plan on going from a loss of $6.51 to a profit of $2.42. That'll be pretty tough to do. That's, hey, we'll find out if they can pull that off, but that'd be pretty tough to do. Their aspect inside of that, let's see. So they do have a 3-year growth rate in the United States of 20% a year. It's a big number. 61.69%. Bottom line, people aren't going to want to be able to, you don't want to look at that picture that's out there today on that Tesla that got burnt up, because, you know, I've seen a few different cars. I'm sure we all have seen a few different cars burnt up over the years. But this burn up, man, whatever type of lithium batteries, or I guess lithium batteries in general, when they burn, oh man, there is nothing left. I mean, nothing left, folks. Let's go take a look at NVIDIA. NVIDIA, you know, started one of the first downdrafts when we go all the way back to November of 2017. And, you know, guess what? This was all over this one. Went from 250 to 219. You're down 360 or 221, and this is going after its swing low, and this is going after its swing low, and it looks like, let's see, we're going to have the volume, 147. No, we're not going to have the volume. So swing low is game, though, because the top of the low is 238. Right now, we are at 221. So that puts it in game. If NVIDIA gets to under 217, that puts it also in a lower trading range, which is pretty amazing, because it hit 217 right on the bat today. And what 217 is, folks, that was the high of December, and that's where it broke out to the next level. You know, so, and it has pretty good volume there, by the way. But that's problematic. Why is it problematic? Because the NVIDIA led up in an incredible way. And what does happen with NVIDIA, of course, is that You know, artificial intelligence, they're big in. Guess what? They're also big in self-driving cars. Stay right there, folks. Come right back. We have the Dow up 51, NASDAQ down 40, S&P's off 3.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads-up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 51, NASDAQ down 42, S&P's down 4. Basically, you got a sideways market out here. Volume-wise, inside this market, let's see what we're going to do. The ETFs have volume for sure. Inside the NYSE, yeah, we're going to do about 800 million inside the NYSE. The composite, Composite's going to be due 2.4. So we're at 2.233. Next few minutes, they'll throw a couple $100 million inside that. If we do look at the Qs are now NDX 100 is a confirmed ABC structure on the way down. Bottom line is that it's taking the B point out, taking it out with volume. You're into the highs of the low of February 9th, and it's coming at you. 159.95, no, let's see, 157.24. So we're not, yeah, we're into it. Yeah, we're at 157.65. We hit 156.04. You're going to do probably about 85 million right now. You're at 80. Bottom line is that how we attack this level is going to be a big one because your price projection is 148. And we have a gap that's wide open from October 26th. That's at 147.70. We pull this back just a little bit more. Yeah, it's not going to throw it into the lower range there, but it's going to be very close. It's going to be very close. And if we bring this back just a little bit more, let me see. Yeah, so this is dangerous, you know. Where the danger part comes in, and the NDX folks and the Qs are at 143. You break 143, and then the whole thing is broken. Meaning, what I mean by that is that how we went topside from 2016 is broken. 2016 definitely would give it some, well, it should give it some support. You know, we do look at from the lows to the highs, and this is where the danger part, because we hadn't done a correction in so long. Just a 0.382 correction on the Qs is 117. That's a normal correction in markets that actually want to go higher, but because we haven't corrected it so long, it's a problem child. Stay right there, folks. Going to be coming back with some numbers after the close. Dow right now up 20, Nasdaq down 50, S&P's up 7.5. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
No matter what kind of...
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great week and a great month. Kicking into April. Pretty amazing. Don't make assumptions. Communicate with clarity. Communicate with others as clearly as you can to avoid misunderstanding, sadness, and drama. If all humans communicate with impeccability of the word, all the relationships would change. There'd be no wars, no violence, and no misunderstandings. Communication, folks. It's a beautiful thing. Market-wise, let's take a look at it out here. We had the Dow Industrials down 9. Nasdaq off 59. S&P's down 9. Sideways market. Get volume in the market. You get the Nasdaq doing an ABC structure on the way down, and the X100 doing an ABC structure on the way down. Dow, S&P's building cause to go take out that swing point, that low swing point. We'll see whether they get good volume. What we did have out here today is the NDX did take it out with volume. The Qs right now are trading at a price point of 157.25. They have a price projection of 148.84. That would bring them under their February 9th swing low, bring them into their October gap. big number. Gold contract down $17.20, trading at $13.30 an ounce. Let's go take a look at the gold market. So you get a short trading week this week. Friday, markets are closed. Good Friday. So gold and the markets in general are going to trade like it's a Friday. And the gold market, can be pretty severe inside the metals market when you have a down week. They hit gold out here today, down $17.20. You're at $13.30. Your strength last week was on the 21st as well as on the 23rd. Both times you did 457,000 contracts. So what I do expect you're going to see out here tomorrow is that this is going to try to get into that swing low of $13.15. That's $15 from where we are. The GDX, what the GDX did do, pull back on light volume, 56 million shares versus 77. So I do expect, number one, that this is going to hold inside the equities. I think it's going to go test it, though. The reason I think it's going to hold is that you're coming into monster volume. You're coming to the low that was established on the 9th of March, of February, 101 million. We had already tested that with 59 million. Then you went topside with 77. You went topside with 74. You're pulling back with 56. Tomorrow, I suspect you'll get even lighter volume, but you'll test this $21.38. We went to $21.56 today. Notes and bonds. Now, the note and bond market, this is what's really wild about this market in general. The note and bond market absolutely refuses to back off. Now, we know that the Federal Reserve, they've already gone up in rates. They plan on going up in short-term rates again. That being said, there are buyers inside this note and bond market, and they're big buyers. What we did out here today, we did 2.1 million contracts inside the 10-year. The 10-year is flat. It got to a price point out here of 121.09. What it's looking to get up into is the February 6th level, which is the 122.02. The February 6th level, folks, also has volume. That's when we went topside. It gave it up in the middle of the day, ended up closing at the lows of the day, but it got to 122.02. That's where this thing wants to go. What we did inside the 10-year today is that we took the swing point out. We took it out with volume. That's saying, guess what? You get buyers. 30-year. 30-year did the same thing, meaning goes topside, takes it out with volume, get buyers there. We've done 338,000 contracts. You're at a price point of 145.28. The 30-year, we're right next to the February 6th high, 146.21. We hit 146.10 today. So my take is that that's where we're going. Now, if we launch this area, it's going to get really wild because there's not much in between this going all the way up to 151. If we go take a look at the TLT, the 20-year bond fund plus, what you're going to see is that the high of February 6th is 121.82. We went to 121.64 today. This is going to need some more volume, but the bottom line is that you are up at this level, and I expect that level we're going to get tested. King dollar. This is where King dollar. This is why gold getting hit out here today. So, King dollar today had price spread. We went from 88.895 to 89.745. So you almost went up a full penny. 762 ticks. You did do 32,000 contracts. That's great contract volume for the dollar. Now, that being said, it's going into the same amount. It's going into 32,855. That's how we came down, and we're right at that level. I expect you're going to get not only just that level tested, the 89,895. We had spiked higher March 1st. 90.490 is game to get tested. Some of the higher volume stocks out here today, you had GE up 24 cents. Advanced Micro is down 19. You had Intel off 159. Square was down 363. NVIDIA was down 417. After being down big yesterday, Amazon took a hit out here. Amazon was down $65. Huge volume on Amazon, though. Amazon did 13.5 million. The highs of the low of the February 9th benchmark that we're looking at, it just came down to it. We went to 1386 with 13.5 million. The high of the low is 1383. So what that does, that brings your probability much higher that you're going to get down into that level. The one you're going to want to watch, folks, inside the NDX 100 is going to be Google. Google looks to me like you are going to jump the creek. What we had out here again today in Google is that it couldn't hold price. You are right at the swing low. The swing low on Google is 992. We hit 980. We closed at 1,004 rather. We did 3.3 million shares. That high volume low is 3.5 million. That is not a good setup. Google looks to me like it's going to jump the creek. And if Google jumps the creek, it's going to take the market with it, NDX with it once again. And thus far, it is the NDX 100 that has a confirmed ABC structure on the way down. Google's been at this level, meaning this consolidation, since October of 2017. Google jumps the creek, get out of the way inside the NDX 100. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over and take a look at Barrick Gold. So, unfortunately, out here today, folks, inside the gold market, this guy was just a leader inside the gold market. It looks like he just died a few hours ago. So Peter Monk, he was a Canadian immigrant, founded Barrick Gold, in the 1980s. Transformed it from a small-scale operation until into a global empire. Yeah, he died this morning. So let's see. It's pretty cool, man. He was born in Budapest, November 8th, 1927. He fled Nazi-occupied Hungary in 1944 with his father's family. His mother, who left the marriage when Peter was 4, had survived Auschwitz. Man, this is intense. Oh, and what a shame. And then she committed suicide in 1988. In 1948, Monk's father sent him to a internment camp in Switzerland to live in Canada with an uncle. In a 1998 interview, Peter Monk said he initially dreaded the move, but I was determined to succeed, Monk said. I probably had enough misguided self-confidence to think I could do it in Canada, even though I couldn't speak the language, didn't have any contacts. Monk would later describe his first job in Canada as a kind of love affair. After post-war Europe, food was abundant, and friends welcomed him into their homes with open fridges, even though he arrived in this place not speaking the language, not knowing a dog. That's interesting. He worked a series of jobs, selling Christmas trees, harvesting tobacco, clearing bush, graduated from the University of Toronto with a degree in electrical engineering in 1952. Let's see. Okay, so Monk's account of his childhood and early years in Canada reflected an optimism that remained throughout his life, according to his daughter, Nina Monk, a New York-based journalist. For my father, the glass was always half full, she said in a July 27 interview. It was that quality that would be tested by the shifts and fortunes that are hallmarks of an entrepreneur's life. Nina was born in 1967, the year of Monk's first business, Clarendon Sound Corporation, collapsed. Her father remembered it as the worst year of his life, according to a 2008 book. For almost a decade, Clarendon's mid-century Danish-inspired stereos were purchased by celebrities such as Frank Sinatra, Hugh Hefner, jazz musicians, but the cost overruns, a too early foray into color television, and ill-fated shift of operations to Nova Scotia contributed to the steep losses of the 1990s. Monk was ejected from the management in 1968 and later sued for insider trading. His first big success was also his most humbling failure. At the same time, let's see, let's get to the gold business. Let's see. Okay, so in 1970, Monk decamped to London, where him and his business partner, David Gilmour, started the next venture, developing a 7,000-acre resort in Fiji with 50 hotels throughout the Pacific Basin. What a trip this is. The audacity of the venture coming on the heels of the Clarendon failure suggests more than optimism in play. Canada author Peter Newman wrote that there are 3 great motivators in Monk's life: restitution, redemption, and revenge. It was all about giving the finger to all those snotty guys from Upper Canada College and Harvard's Business School who never waved goodbye as he departed for his exile to the South Pacific from the Clarendon fiasco. In 1979, Monk returned to Canada. In 1981, he sold Southern Pacific Properties, walking away with $100 million. A year later, he started Barrick Petroleum. So 1981, it looks like. 1982, Barrick would have started. Oil and gas exploration company, but soon shifted to gold. Renamed Barrick Resources, the company went public. In 1983, 3 years later, Monk purchased a small Nevada gold mine. Oh, yeah, Gold Strike. Oh, my God. For $62 million, the company's geologists discovered new gold deposits at the site, which became one of the world's richest gold mines. Yeah, amazing. Monk's other deals include amassing 43% in Trizic Corporation, a real estate developer. In 2015, Brookfield and buyout firm Blackstone acquired the firm for $8.9 billion. Pretty wild. Oh, let's see what this said about. So occasionally, his best deals were the ones that got away. In 1997, Barrick lost a bid to control Bre-X Minerals. Listen to this, because if you don't know about Bre-X, folks, this is crazy. And it's a Bruscan gold deposit in Indonesia. Bre-X soared to the market value of $6 billion Canadian, 4.6 billion US, before declaring bankruptcy after claiming a huge reserves in Indonesia was found to be a hoax. That's so cool that he didn't get the deal. Barrick expanded during a long decade-long upturn in gold prices, becoming the world's biggest producer with the acquisition of Placer Dome in 2006 for $10 million, including debt. The ultimate goal is to be the biggest, Monk said in May of 2011. Why wouldn't it be? Why would you be happy with halfway? Upon retiring in 2014 at the age of 86, he handed control to John Thornton. A foundation established with his second wife, whom he married in 1973, serves as a vehicle for the bulk of his philanthropy, encompassing personal 170, so this is pretty cool. $175 million is in the Peter Monk Cardiac Center and the University Health Network, where it was housed. $40 million in the University of Toronto's Monk School of Global Affairs, and $43 million in the Technician Israel Institute of Technology. Pretty cool. ABX. And ABX, we take a look at this. Let's see. So, yeah, they do $8 billion a year. Pretty cool, right? Pretty amazing. That's quite a MO. Quite an MO, no doubt about that. Big numbers, man. I mean, that's quite a deal. Imagine, you know, you're going from what? You're running away from the Nazis. Your mother's in Auschwitz. You get to Canada. You can't speak either French or English. Guess what? You go off to the races, man. That is a beautiful thing. Let's go take a look at the XLF. So, the XLF, folks, what do we have with the XLF? This is financials, right? Financials, they're going after the swing low, have the volume behind the move. On the weeklies, what you're going to see out here is that this thing is banging into the lows, and it has some real juice. Last week, we did $317 million. This week, we've already done $246 million with 2 days left, even though we don't have one on Friday. You have to average that baby in. So it looks to me like that's going to get whacked. Now, the one, we brought this up in the last hour. This is going to be so cool watching this. There's certain either sectors on the way up, stocks on the way up, sectors on the way down, stocks on the way down, that release a good amount of information about where the market's going, speculation-wise, but where is it going? Goldman Sachs is going to be a big one, folks, and this is why. Goldman is trading at 249.37. It had a high this month of 275. When we look at Goldman, Goldman had taken out its 2007 high last March. Now, when it took it out with dramatically lighter volume. We took it out at 53 million versus 227. If we have Goldman close tomorrow at less than 250.70, you get a monster failure. That's going to be a big heads up that the financials are going south also. Stay right there, folks. Come right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XM SAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at the energy complex. So, energy out here, folks, today, you had oil top out, well, not top out, oil 2 days ago, tested its high, 66.02, failed on price, failed on volume. We come off that high today, and we come off that high with volume. If we take a look at this contract, you were down 0.9%. It's not a lot. Bottom line, you did 676,000 contracts, big contract volume. On Monday, that's when we hit 66.50, gave it up. So we're at 64.64. Once oil, well, if oil gets inside $64.07, that opens up the low of this consolidation, which is 57.60. So 57.60 is a big number. If we go to the XLE came down today, monster volume on the way down. It's been building cause since February 8th. February 8th or 5th? February 8th. The XLE came off its high of $78.36. We're at 66. You had a big expansion of volume today. The high volume swing is 64.45. The top of that is 67.58. We're into it. Bottom line, looks to me like you're going to not only go after it, looks like it wants to take it out, and the bottom of this range is 61.81. Now, if we go over to let's go to the ExxonMobil and Chevron. So ExxonMobil, big problems. Okay, the low of February 9th is $73.90. We're $1 below it. This already has broken the lows. We're down from $89. So you're off $17 from the high, which is a big number for a stock that, rules the world. Exxon's problem is that it has a high volume swing low at $66, and that's where it looks like it's going. If we go to Chevron, take a look at Chevron. What you're going to see with Chevron, Chevron's down $2.56. You're trading at $112. Guess what? The high volume low in Chevron is $108. The top of that is at $118. That baby also is barreling down there. We put this on a weekly. You already got back inside the lower range. That's saying Chevron wants to run somewhere down at the $106. What's intriguing about this is that the last time that, if we pull this oil contract up, when oil came down in 2014, this is what the difference was. When we look at the top oil stocks versus physical oil. In 2014, what we had done, we came down fast and furious from the price point of oil was at 107, and it was a straight line move down. right down to 43. The difference there was Exxon and Chevron, they pulled back. They pulled back before the contract, but you're talking about pulling back before the contract only like a couple weeks. And they get hit good. The difference here is that Chevron and Exxon have gone down, we're talking, what, a full month, and oil still hasn't moved, right? Let's see. It's more than a month, February, March, full 2 months. So this is going to be a big heads up of how this shakes out. My take right here is that this thing's not only going south, but we're going to see some firepower inside this oil market. And I expect we're going to see lower prices. If you do happen to be a TD Ameritrade client, I know we got a lot of them out there, their network tomorrow morning. I'm going to be on that network at 7:30, no, 8:30 in the morning. I'm going to be talking oil. We're going to be talking oil stocks and the actual futures. They had some good volatility out here today, there's no doubt. If we go take a look at the USO, the oil fund, what you're going to see out there, that also topped out, you know, got almost right up to that $13.29. We hit $13.30. That's coming back, and well, this says quite a bit too, because what you do have inside the fund is that it has that now that's not even close to the downdraft of February 9th, but yet that's where it looks like it wants to trade. So what's okay? So this is WTI delivered. This is okay. This is the actual physical oil again. Let's go take a look at Walmart. So you got the battle that continues. Walmart with the good old Amazon. Walmart, bottom line, you know, that's coming into its breakout area from October of 2017. So right now we're at 87.77. That's where the strength is. So, you know, Walmart doesn't look that bad here. If Walmart, that's something you want to keep your eye on, actually, because at $79, 79 to 86 is where it broke out from, and it's coming back into that area with light volume. So we'll see how that shakes out. The Intel, you know, really strong. Bottom line, pull back. No big volume out here today. Intel's still pretty strong. Netflix, let's go take a look at Netflix. Netflix was one of the movers on the way down today. So Netflix down $14.92. Now, the first get-go down on February 9th, yeah, it had volume. I guess, yeah, it had volume. It wants to go after that February 9th. So February 9th, it traded down to 236. Goes topside in a huge way, gets up to 333. Look at that. 236 to 333. Now you're off of that and off of it with volume. What you want to get your head wrapped around, folks, is this. So the NASDAQ composite, as well as the NDX 100, loves leading markets up, and they lead markets down. And it's just on a consistent basis. What you normally get, which we got this time once again, is that when you get markets that have been moving really nice, steady, VIX isn't high, you get momentum. And what happens on momentum is just not I'm not talking about the market crawling up every day. What I'm talking about is momentum stocks. So what momentum traders will do, and there's a lot of funds that are momentum traders, a lot of individual traders that are momentum traders, and it's a great discipline when things are going good. It's a great discipline when things are going bad. What I want you to wrap your head around, though, is this, is that when momentum breaks and breaks down, momentum traders will get out of equities as fast as they got in equities. And that's what we have going on inside the NDX 100 right now. You know, each and every time that, you know, things go down, your momentum traders, bump, you're buying. Doesn't matter whether the stocks make money or don't make money. What matters is that where's the momentum, where's it going? It's going higher. When that breaks down, which it has, it's broken down. The reason you know it's broken down is that you've seen how fast the other equities inside the NDX 100 are going down. The FANG stocks had their worst day in 3 years yesterday, meaning percentages that went down. When I saw Netflix today, they're going from Netflix hadn't broken down. Netflix is definitely a momentum stock. Now what has happened is that I suspect it seems that once Amazon got hit, which Amazon got hit today, guess what? That took the rest, not the rest, but that took Netflix with it on the way down. Now you have an aspect that you get Facebook, Google, Snap, Twitter. These are all momentum stocks on the way up. Guess what? They're going to be momentum stocks on the way down. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over. We were just talking about the aspect of momentum too, and yeah, I want to thank our man Duffy putting in the because you know it was also momentum out here, folks, is the SMHs in a big way. And NVIDIA today, NVIDIA is down $4. You're $221. This thing led on the way down. This was the first one that led on the way down in November. That thing got smoked. You know, it went from a price point of 217 down at 180 in all of the 8 days. And then bang, it went from 180 up to 249. Now, watch this. So the Qs, we go to the Qs for a second. You're going to see inside the Qs, you get an ABC down. We broke the B point today. B point was 158.43. Volume characteristic was 80 million. You broke it, 87 million. And if you you know, don't have my book, folks, you can go right to Amazon. Out of time in the trade. Bottom line, you'll get to understand all these ABC structures, Fibonacci, Gottlieb patterns, all of the above, price and volume. So the Q's broke it. SMHs, guess what? Also broke it. And as you're going hunting stocks out here tonight, folks, you're going to be looking for these because this is what ends up happening with ABC structures on the way up or way down. First, you get a couple. Then they start pouring on. This is impressive in the aspect that the NDX, the probability that you're going to get the full price projection of 148 goes up dramatically when you get the SMHs breaking the swing also with volume. And on the SMHs, your A point is the high, 114.55. Your B point is last Friday, that low, 104.09. You had volume of 8.4 million. What do? You have volume of 8.4 million. Yesterday, your C point is 109. You barreled through the B point today. You blow the B point away with volume. We did 10.9 million versus the 8.4. That gives you a price projection of $98.67. Now, check this out. This is when it's always getting wild. $98.43 is the high of the low of the 9th. More than likely, what's happening here, we're going to go right to the $93, high volume swing low. We put this back on a weekly, and what you're going to see in a weekly, and this is what's really cool on the weekly. On the weekly, what sticks out is the first downdraft in November. And that's when I said that that's when NVIDIA basically let us down. The SMHs went from 105, and 2 weeks later they were at 95. That being said, that was the first high volume low. You heard high volume low on a weekly basis, there was 40 million shares. So watch this. You have 40 million shares. You go back up, you make a high with 24 million. Supply versus demand. What do you get? No demand. No one's in the store. People are paying up for the product. What happens in January? You go from 108. We go down to 93. Monster volume. The first leg off had 30 million. Second leg down, 66 million. What happens? Guess what? Deviant market. What does it want to do? Wants a higher high. No one's in the store. Somehow they get people to buy it. What does the market do? We make a higher high with 24 million. So watch this. 24 million was your high at 114. 24 million was your high at 108. 6 million was your high at 105. That's how sick this is. Then you came down with 40 million. You came down with 66 million. Last week we came down with 26 million. This week you're already at 25 million, so you're going to run about 45 million probably. Bottom line, those SMHs are going after that high volume swing low. You know, you break the high volume swing low, then on the SMHs, which is game is like $86. So it's a monster heads up in general. Now the strongest, another way to do this too, is to take a look at Intel, which is one of the strongest ones inside the SMHs. And thus far, you know, Intel's still acting really well. You know, so it's not like, you know, Intel got over its swing point and did have lighter volume, and you're inside the lower range now. But Intel's the one to keep your eye on, because if Intel gets into the $47 range at all, then 42 is game. And if you have the strongest stock inside the strongest indice that you took your top side, that says quite a bit. Let's go to Lam Research. We'll stay right in this indice for, yeah, so Lam failed. Lam just went from 234 to 196. Put this back in a weekly. Yeah, that's a monster failure. This is intense. This is really intense, actually. So let me see who else is in here. I know you get Xilinx. Let's go to CLAC, KLA 10 core. Okay, so KLAC. Yeah, that already failed too. Yeah, this, you know, this has been out there. So CLAC has just gone from 123, you're at 106. So CLAC came off the highs with volume too. This is a problem. And AVGO, yeah, that might have started the whole thing. That's Oh, look at so Broadcom's off its high of 285. You're 236. 5.4. Oh, that was almost an ABC down too. As you're hunting either tonight or tomorrow, you're going to find more ABC structures on the way down. The real kicker, excuse me, folks, is going to be the. Here, let's look at the S&Ps for a second. So when you build cars, building cars goes like this. It takes a huge amount of energy to do what we just did. You know, bottom line is that when you take a look at the last 2 weeks, the SPY just, well, even different. I went over this morning. This is how it seems that this market is set up. We came off the first high in January. Take a huge amount of energy. We went from 286 straight down to 256, 52, right? Have volume. The amount of bounce was amazing. So we went to 252, and you get up to 280. Then the market let loose, and now I suspect because the bounce was so dramatic on the way up, this market can't bounce. It's going sideways. It's a sideways move, building cause. First off, to get to the high volume swing low, we'll see what ends up happening at that particular point. The NASDAQ has already confirmed an ABC down underneath the high volume swing low. SMHs have confirmed it. ExxonMobil, and that's why the reason I brought up they're already below it. When you get Exxon, that's already below it. Boeing is right at it. If we take up Boeing, actually Boeing went below it today. Let me see. Yeah, Boeing went below it. It closed above it. Boeing went to 311. 317 is the number. Bottom line, folks, take a look at your portfolio, get your stops in. That high volume swing low is a problem. If you're in the NDX 100, you get a big problem. You might not have a problem as long as you get the stops in. Bottom line, it's been a sweet market on the way up. Don't give it all back on the way down, because guess what? It's your money. It's your money, and it's your money right now. So yesterday's gone, tomorrow's not here. What are you going to do right now? Put a stop in. Don't leave it there. Dow down 9, NASDAQ 59, S&P's down 7. Stay right there. We're coming back. We'll go over Europe. We'll go over Asia, because Asia's going to be opening in 3 hours. Right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if we go overseas, folks, and take a look at Asia first. Last night, you had the Nikkei down 1%. Hang Seng was down 2.5. You had the Nikkei off 1.3. So if we go to the Hang Seng first in Hong Kong, what you're going to see out here is that you're down 768 points. You're coming into the February 9th level. These are one world markets, folks. And let's see. So you did 2.2 billion. You're going into 3.6. So the volume was light last night. That being said, I expect what you're going to see is that we're going to push into this 29,930, which is it's only a couple hundred points down from where we are. That's how that baby is set up, though. Let's go to the Nikkei in Japan. So the Nikkei in Japan last night. And this is going to be intriguing because this has to do with the yen, too. That was down $286. Oh, this is interesting. So this already broke its February swing level. Broke it big, too, man. So right now, we're trading at 21,031, and it's 21,078. That was already below it. If we go to Europe, swing over to Europe, what you have with the UK out here. So the UK was one of the first ones to break that level. UK, that we're at 7,044. That level was 7,079. The DAX in Germany, that's way below it too. Yeah, the DAX in Germany, the low there, 12,003, right where 11,940. These markets, this is where we're not only just going there. You pull these back a bit, and you know, you have the shot to basically, you got to take a look at these markets because the DAX, this is what's going to be pretty wild. So the DAX in Germany is back to January of 2017. If we go take a look at the FTSE, it's probably around the same place. Let's see. The FTSE is back. The FTSE is back to October of 2016. Well, it's only 2 months earlier. Pretty amazing. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow, 8 o'clock in the morning. Opening baseball. Beautiful thing. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.